Okay, the S&P 500. See that right there? S&P 500 ETF. Let's take a look at the numbers, just in case you're curious. Historical data. Hold that thought. Wait for it to pop it. There it is right there. Now, we want to look at dividends only. Now, Devin, the reason why I want to look at dividends only is because, are you ready for this? Okay, dividend is a portion of the company's profits that they give back to the investors. So hold that thought. Let's take a look at 20 years of the dividend payments from SPY. Low battery, I just plugged the damn thing in. Let's plug it in a different phone. There we go, that's better. I don't know why. Facebook doesn't. Okay, so Devin, check it out. You ready? Here we go. March 18th, 2005. Now, what I want to see is consistency of profitability, which means every single entry I look at should be higher and higher and higher and higher. Now, when I say it boggles my mind. I told you this earlier today. It boggles my mind why people put money into something that is not continuously profitable. So let's take a look at SPY, which is the S&P 500, okay? March 18th, 2005. 46, 48, 52, 67. Do you notice how each one of those gets higher and higher and higher? Hold that thought, okay? 56, 46, 48, 52, 67, 51. Hold on a second. That just went backwards. Okay, so if I have a company and I'm making X amount this year, my goal is to make sure I make more money next year. Well, that's not happening here. Okay? 46, 48, 52, 67, that's 4 higher. 51, that's lower. Okay? That's 4 steps forward, 1 step back. Hold on, it gets worse. Hold on. 51, 55, 57, 79, 55. Wait, that's going backwards again. 66, 69, 71, 56. That's backwards. 51, that's backwards. 50, that's backwards. 48, that's backwards. Why would I invest in a company that's not consistently profitable? They're doing something wrong. Think about it. Why put your money into something that's not consistently profitable? So, Devin, I'm not going to tell you what to do. I'm going to tell you to do some research. Find out what works best for you. Okay? So let's keep on moving. West, good evening, Captain Obvious. Good evening, Captain Obvious. No, it's fine. JC, good evening, good evening. I can look, but they may have a cost of equity floor there. JC, I have no idea what that means. Okay. All right. Let's keep on going. Oh, Aaron wants to take a look at Texas Instruments, TXN. TXN. Tra-la-la. Nope. Do you see how quick that was? It takes 3 to 4 seconds to look at a chart, say yes or no. Okay, high, low, was, is. Look at the motion. Up, sideways, down. Look at this. That right there is telling me no. Let's zoom in a little closer so you can see it better. Okay, here's the high. It dropped down. Now it's shot up. I don't want to jump in there. 1 gap up, 2 gap ups. No thank you. Sorry, no to Texas Instruments. William C. How Iron Willie. Cool beans. That was contextual 20 minutes ago. We're past it. Oh, sorry, JC. All right, let's keep on going. Did you do anything with Ford today? No, I don't have any Ford. Okay, sorry, Neil. Thank you there, Joe. Flipper, good evening, Flipper. How are you today? Jeter, better, cool beans. Papa Laos, yep. All right. What choices might you have? All right, neochromium, I'm not quite sure what you mean by that. Chris, I can't find calls on any of those dividend lists you mentioned. Did I miss it? No, you didn't miss it. Okay. Now, when I say I invest in dividend stocks that are consistently profitable, I also have investors that I work with that sometimes I have to buy what they want me to buy. Okay. I have a poor connection. Yeah, baby's in the house. Woohoo! All right, what do we have over here? Oh God, why? I can't believe I'm watching Tony Hawk right now. I'm starstruck. Yeah, brother, gotta love it. All right, let's keep on going. All right, let's keep on moving right along. Holy cow, we're almost at 11 o'clock. We got another 30 minutes to go, and I'm out of here. Now, my weekend starts tonight. Okay, so I'm not going to be here tomorrow night, and I'm not going to be here Saturday night. Last year, it was 7 days a week. I did 360 videos last year, live shows, 9 p.m. until 11:30. I missed 5 days, no, 6 days. I was sick one day, had to take someone to the hospital the other day, and I lost 4 days because of the hurricane. Not sure if you guys know, we had a hurricane last year. 4 days, no water, no electric, no cable, no internet, nothing. I thought it was great. It's kind of like barbecuing. Had a weekend fun. It was great. All right, anyway. What about XRP long term? Naz, you're new here. You are so new here. Let me explain this to you briefly. XRP is not a dividend stock. Okay, you come to a channel that says dividend investing for weekly cash flow. The key word there being dividend. XRP doesn't have any dividends that I know of. And XRP is definitely not 2 decades of profitability, which is 20 years. So no to XRP. Oh God, why? Have a beautiful night, sir. Love the energy and humor. God bless. Thank you. Ooh, gotta love it. All right, so you guys have nothing else for me to take a look at? Awesome. I'm going to pull a rabbit out of my hat. All right, so let's take a look. What do I have on my list for next week? Okay, now, every night you will hear me saying, ooh, that's a great stock. I'm going to write it down. Okay, so I'm about to look at the stocks I wrote down last week for this week coming up. Here we go. What about XUA? Yeah. Okay, dude. XAU USD. That is Forex. I don't do Forex. Dividend stocks only. AJ, what's your favorite stock to correlate with? That would be US Steel at this moment in time. Okay, so what do I have on my list here from last week? JP Morgan. Ooh, JPM on my list. Ooh, nice. I don't know, but this might be tough right here. Let's zoom in there, see if that makes sense. Yeah, no, it don't. I don't know. Depends if you like it. We'll take a better look at it. A deep dive into JP Morgan. Are you ready? Here's the high, here's the low, here's where it was, here's where it is. Look at the motion. Up, down, up, down, up. Okay. May or may not be a good idea. Who knows? A year ago, we had the bottom of the year for JP Morgan. And that was 188. Now we topped off at 280, and that was in February, okay, mid-February. Okay, from there, she just drops. Okay, down, up, down, up, down, up. Okay, so now here's a new bottom here. 1, 2, 3 days to the upside. Can that keep going? Because this is your 90-day. Okay, so for the 30-day, it's going to be a no, but for the 90-day, it's going to be a yes. Well, it depends. Do you really like JP Morgan? Does it make sense to you? Oh. Okay. Brajois Das. Then tell U-Soil. Never heard of U-Soil. It's going to be a no. Sorry. Are you a swing trader or a day trader? I guess you'd call me a weekly trader or an options trader. Because I only buy and sell on Mondays and Tuesdays, and I held until Fridays. Okay, let's keep on going. So, J.P. Morgan, last 30 days. Okay, so here's the last 30 days. Here's the high of the 30-day period. Here's the bottom. Now she's shooting up. Can it go higher? Yes, it can. Do you like J.P. Morgan? All right. The 244, looking at the 245s, and the 245s are going for $4. Well, that's more than 1%. Do you like J.P. Morgan? That's a big question. Well, if you like it, it might be a good deal for you. Might be. I don't tell people what to buy. I just look at the numbers and show you what it looks like for my trading strategy. Okay, now my trading strategy is different than a lot of people. I don't know anybody that does what I do. All right, keep on going. All right, so that's J.P. Morgan. Next on the list, man, what does J.P. Morgan look like? Hold that thought. Let's get out of there. The 245s, let's do the 245s for the fun of it. The 245s right there, one contract, J.P. Morgan. Give you an idea of what a big dollar stock looks. I don't know if this is not really a big dollar stock, but by one covered call, J.P. Morgan, to May 25 means the option's going to expire next Friday. 245 call option against the stock at the market to open. Profit 461. What is it going to cost? 24 grand. Let's get out the calculator. What kind of return is that? Do you like tape reading with level 2? Okay, AJ, I'm not 100% sure what you're talking about. Now, AJ, I've been trading for almost 30 years. Almost 30 years, okay? I don't know everything, and I don't claim to know everything. I have a very niche trading strategy. 90%, maybe even 95% of what's on this trading platform, I got no clue because it has nothing to do with what I'm doing. Okay, so if I'm heading east looking for a sunset, I have a problem. Okay, so if it makes no sense to me, if it has no relationship to what I'm doing, I have no clue what it is, and I have no desire to know. Okay, if it doesn't directly affect what I'm doing, I don't want to know. It's going to do nothing but clog up the space in my head, and I don't want to do that. Okay, so no, I don't know what tape reading with level 2 is. Sorry, don't know it. All right, let's break out the calculator and see what kind of rate of return J.P. Morgan is. 461 is the profit. 461. What is it costing to do the trade? $24,039. That's 1.9%. Okay, 1.9% for J.P. Morgan. And it's going to cost me $24,000 to get 1.9%. I could do Ford and get 2.2% and only put in $1,000. I don't know. 1%'s 1%, no matter which way you look at it. Okay, so that's J.P. Morgan. Let's look at another one. Another one. Let's get out of that. Let's get out of that. Let's change this back to this. I saw that question. Give me a second. Could you go over what the gap in the stock means again? Oh boy. Aaron, you see this chart right here? You see how each one of these is called a candle. Let me zoom in a little bit closer so you get a better view. Okay. These are called candles, okay, because it looks like a candle, okay? There's the body, here's a wick, and here's a wick. That looks like a candle. There's green and there's red. Okay, green usually means an up day, red usually means it's a down day. Now, there's there's 5 things you got to remember about a candle, all right? The top of the wick is the high of the day. The bottom of the wick is the low of the day. On a green candle, the bottom horizontal line is the opening price of the day. The top horizontal line is the closing price of the day. That's 4. Number 5 is the distance between the top of the wick and the bottom of the wick. That is the range of the day, how much it moved. So if I take my little cursor, okay, put it right there, okay, opening price, high price, low price, closing price, and the range, how much it moved, okay? After that, you have the volume, but that has nothing to do with the candle. So where you see the opening, the close, the high, the low, they kind of run into each other until you get something like this. That is called a gap. And there's another one right here. See, each one of these are touching each other. That's touching this, that's touching this, that's touching this, that's touching this. There's nothing touching this. Floating all by itself, a gap down. A gap down. Okay, now, remember I told you there was 5 numbers? Out of those 5 numbers, only one is controlled by one person. Let me briefly explain. The opening price of the day, okay, right here, opening price of the day, whether it's a green day or a red day, the opening price is controlled by the market maker. That means if the market maker is having a good day, had a nice breakfast, had a nice workout at the gym, took a dip in the pool, maybe got in the sauna before he showed up to work, he's in a good mood. Maybe he'll make it an up day. I don't know. If he had a bad day, I don't know, might be on the downside. That's just one number. What about the other 5? Well, as soon as the market maker sets whatever price he wants, we, me, you, and all the other buyers and sellers, we create the high of the day because we keep buying until we say, wait a minute, that's too expensive, we're not going to buy anymore. So we create the high of the day. We do that. And then the last trade of the day, well, whoever's in last place at 3:59 p.m., that's the last price of the day. So the high price of the day, the low price of the day, and the closing price of the day, and the range, that's all controlled by us. We are the buyers, we are the sellers. There's only one number that's controlled by one person, and that is the opening price of the day, and that's the market maker. He's the owner of the convenience store. You know that little corner store down the street? Circle K, Quick Stop, Quick Mart, 7-Eleven, you know, the owner of the store. That's the market maker. He does the buying and the selling. Okay? He controls the opening price of the day. This here is created by the market maker because the closing price, okay, the closing price of the day here was 245.82. Right? That's the number right there, 245.82. The very next day, the opening price, 234.27. So the market maker dropped the price the very next day. And then he did it again. Okay, the market maker controls the opening of the day. And if the opening of the day is lower, it creates a gap between this day and this day. And then again, between this day and this day. That's what a gap is. And gaps have a tendency to fill. So you see this one here and this one here. Well, this gap already filled here, here, and here. This gap hasn't filled yet. So more than likely, the stock is going to open up higher and then go up higher, and then that gap will fill. Okay? Let's keep on keeping on. Do you use prop firm account or do you use your own money to trade? AJ, I use my own money. Long-term gold futures, your prediction? I don't do gold. Okay, there's no possible way for you to earn weekly money from a bar of gold. Hey, it's nice to look at. I call it a dust collector. It does nothing more than preserve the value of your money. So if you buy $1,000 worth of gold, well, 10 or 20 years from now, it may be worth a lot more. But if you had $1,000 in cash, 20, 30 years from now, it may be worth nothing. So you cannot get weekly cash flow from gold unless you're trading gold futures, and then there is. What platform do you use? Robin the Hood. This is Think or Swim. used by or owned by Charles Schwab. Now, you can use Charles Schwab trading platform, but I prefer this trading platform. Now, I've been using this trading platform for 20 years. Originally, it was Thinkorswim, okay? Then it got bought out by TD Ameritrade, okay? TD Ameritrade got bought out by Charles Schwab, and all those three owners didn't change a single thing with that trading platform, okay? Next, that's JP Morgan. Next will be Dollar General. Ooh, gotta love some Dollar General. Yeah, Robinhood. I actually do have an account with Robinhood. I love it. It's great. It's limited what I can do with it, but I still like it. Dollar General, DG. Here we go. Ooh, not good. Okay, 3 to 4 seconds. You ready? High, low, was, is. Look at the motion. Okay, down, up, down, sideways, up. So look at this right here. Not the greatest place to jump into. Now, it may not look that way by looking at, the 1-year chart. But when we zoom in to the last 30 days, okay, this is what we're seeing. 30-day bottoms here. She jumps up. There's your 30-day high. 30-day high is going to have profit taking. Stock's going to drop. That's exactly what happened. Now it shot up again. Okay, the distance between here and here was enough for people to start taking profits. Now it's coming back down again. So Dollar General is going to be good to jump into in about 2 weeks. So I'm going to write it down for 2 weeks from today. Oh, wait a second. DG, there we go. Somebody wanted to look at Cava, C-A-V-A. I don't know why. That's a no. C-A-V-A. Cava Group. Okay, wait a second. That looks okay. So why are we saying no to Cava? Let's go to Yahoo Finance. C-A-V-A. That's why it's a no. There are no dividends in the time period selected. So if it doesn't have any dividends, how do I know if it's profitable or not? You actually want me to read 20 years worth of quarterly reports and annual reports? Hell no. And they don't have a dividend, which means they're not sharing their profits. So why would I want to buy that one? Nope, sorry. Next on the list, Apache, A-P-A. A-P-A. Oh, Bubbles. Oh, my goodness, Bubbles, how are you? Uh-oh. Jose Lopez, ¿Qué pasa, amigo? ¿Cómo está? Do you ever use margin? If so, how much? Okay, see, I have 7 different accounts. Now, some of my accounts are a 1-for-1 margin. Some of my accounts are a 2-for-1 margin. And I have one account that's a 3-to-1 margin. So I always tell people, never, ever, ever use margin until you understand the risks involved. You're actually using someone else's money to trade with. And if you're just starting out and you're new at this and you don't know what you're really doing, you can lose a whole boatload of money. Yeah, don't use margin until you understand the risks. All right, next. Okay, here we are. High, low, was, is. Look at the motion. Down, up, down, up, down, up, down, up. Okay, nice. Look at it. It looks like it's coming up right now. The bottom was a couple of weeks ago. Now she's in an upward trend. 34 to 16, that's a 50% drop. 34 to 16 is over a 50% drop. You're going to make most of your money buying at the bottom. Well, there it is right there. There's the bottom. Let's take a look. What else do we have to look at? 1626, closest strike price would be 1650. 1650, 41 bucks. Oh, sorry, 41. So 41 is more than 2% of 16. Well, think about it. 1% of $16 is 16 cents. So 2% of $16 would be 16 times 2, 32 cents. Well, this one is 41. Now, I know 41 cents doesn't sound like a lot, but do the math. Oh, AGNC, I see that over there, Kevin. Give me a minute. We'll take a look at that next. Now, I know it doesn't sound like a lot, but 1% every single week for the whole year is over 50% return for the year. And when was the last time you got a safe, predictable, consistent 50% per year? When? That's a yield trap. Oh, AGNC is a yield trap. Oh, we got a little bit of controversy over here. AGNC. Which stock is that? That's Apache. Let's finish up with Apache first before we look at AGNC. Brian, I use Thinkorswim, which is Charles Schwab. Okay, if you've been with a company long enough and you've shown consistency and profitability, they will give you a 2-to-1 and a 3-to-1. Okay, some people I've heard of having a 5-to-1. That's awesome. I'm not there yet. Scott, good evening. Okay, so let's finish up with Apache, and then we will do the, what do they call that? A yield trap? Yeah. Okay, Big Dragon says Schwab is a great brokerage. Okay, that's the one I use. I don't use their trading platform. I use the Thinkorswim platform. Oh, Robin Hood has a 4-to-1. Oh, cool, dude. He's got a 4-to-1. I only have a 3-to-1. I only got one of those. William, when I watch your stream on YouTube or Instagram, the charts are backwards. Do you stream on anything else? Yes, I do. TikTok, Facebook, Rumble, Twitch. I think I stream on like 7 accounts at the moment. I want to do X, I want to do Truth Social, and I want to do LinkedIn. But I got to get approval for those. So I'm working on it. And the reason why it's backwards is because the software doesn't allow you to invert the camera. It does on TikTok, but none of the other ones. Pfizer Unlimited, what happens to the 1% per week profit on a bad week or month? Why does everybody ask that question? Okay, Unlimited, I've been doing this long enough. You make it sound that over the last 20 years, we haven't had situations like that. Well, I have stocks that are down more than 50% when I bought them, and they're still bringing in over 1% a week. Okay? So I got Harley Davidson at 35. Right now it's at 24. And it brings me in anywhere between $400 to $1,400 every single week just on my Harley Davidson position. So I'm not too worried about when the stock drops. I've been playing this game long enough. I'm not worried about it. And those in the morning trading group, that it's a paid for service, okay, they get to watch exactly what I'm doing and they get to ask the exact same questions. John Turk, how are you today? Big Dragon, if it's a growth stock, then you buy more and average down for a better position. No, not really, because 90% of all my money is invested at all times. So when my stocks drop, I don't have extra money to dollar cost average. But I do sell a covered call a little bit lower than what I paid for it. But I don't do it to a point where it's risky. All right, new into stocks. Wesley, how are you today? Love the advice you're giving. Awesome, Wesley. Wesley, if you're just starting out, take your time. Paper trade, it doesn't cost you anything, okay? Just take your time and practice. Practice, practice, practice. Excuse me. When you're good at it, then do it. No, I was telling the guy having money on the sideline is a safer option. No, it ain't. You got money on the sideline, it's bringing you in zero. Okay? Now, I do have some money on the side, so out of a $100,000 account, I'll have like 10 or 15,000 on the side. That's about it. Only because of the economic turmoil that we're in at the moment. Now, when everything is business as usual and we don't have fighting amongst ourselves, you know, the Democrats fighting with the Republicans, the blacks fighting with the whites, the Chinese fighting with everybody. No, sorry. Okay, when it's business as usual and nobody's fighting with anyone, 98% of all my money is invested. But at this moment, with that panic selling, I have to leave some cushion because, you know, some people out there are just weird. Weird, it is. All right, unlimited. In that case, what happens if the option gets executed and the stock is taken away from you? No, not at all. Okay, they have what's called a rolling option, which means I can roll it into the next week. I can roll it into the next week. I can roll it as far as I want, as long as the options are trading. Okay, I've only had one loss, well, 2 losses this year. Each their own. Okay, to each their own. Not eats, to each. To each their own. Okay, when the stock drops and you sell a call next week, what's the considered as a dangerous strike price? 2. Okay, there's at the money, in the money, and out of the money. At the money is where all the action is. That's the highest rate of return, at the money. Okay, in the money is a safer trade. Out of the money is not as safe, but it still brings in cash flow. So when my stock is down from my purchase price, I sell 3 to 4 strikes out of the money for safety. Rolling options loses you money in the short run. No, Big Dragon, it doesn't. Okay. Lisa M, good evening, good evening. What do I think of Bristol Myers Squibb? Ooh, I like that one. Big Dragon, false. Oh, my. I love it when people question my... just question me. Okay, Big Dragon, I'm going to show you something. A1 Steak, back again, cool. Did you have to roll your covered calls today? I think I rolled 1 or 2 today. Okay, so, Big Dragon, you ready for this? Love it when people question me, especially people who don't know. That's 2024. I don't want that one. I want to go to 2025. All right, Big Dragon, you ready for this? All right, that's this week. Last week, here we go. All right, where's the roll? All right, are you paying attention, Big Dragon? These are the trades I made last week. All my trades are available to look at. This right here is a rolling order, okay? I bought the 17 April, which was last week, and I sold the April 25, which is this week, okay? The Riley $3.50 call option, I bought it for 1 penny, I sold it for 13 pennies, and I walked away with 12 pennies. So walking away with 12 pennies doesn't sound like a lot, but hold that thought for just 1 second. Okay? Now, all the way over here. Okay, now see if you can understand this, okay? Because some people don't understand how things work, and I want to explain it slowly so that you understand it. Okay, Big Dragon, you ready? Now, I have Riley. I sold the $3.50 call option, okay? Last week, I bought it back, and then I sold this week's. I picked up 12 cents per share. Now, I know 12 cents per share doesn't sound like a lot to you, but let's do this. Okay? 12 cents per share multiplied by how many shares? 68 contracts. Wait a second. 68 contracts is, let me think. Wait a minute. Hold the phone. 68 contracts here and 7 here. See, Riley, all the same? All the same, sorry. So 7 here. 4 here. Okay, Riley, 4, Riley, 7, Riley, 68. Okay, 1 is 11, 79. 79 contracts for Riley that I rolled last week. The chart's right there. You can take a look. This is the trades I made last week in account number 1. Now I have 7 accounts. I share 3 of them publicly. This is one of them. So let's do a little math. 12 cents a share times 68, 7, and 4. That's 79. 79 contract. That's 7,900 shares. So let's do the math. 12 cents multiplied by 7,900 shares comes to a grand total of $948 just on that one trade for Riley. That is a rolling order. Okay? Buy 4 contracts, Riley, 17.25 to 3.50 call, 1 cent. Sell, all right, 4 contracts, Riley, 25 April 25. That's tomorrow. That's tomorrow. Okay? $3.50 call, 13 cents, 12-cent credit. 7 contracts, Riley, 3.5, 12-cent credit. 68 contracts, Riley, 3.5, 12-cent credit. Do the math yourself. That's $948 just on the one Riley stock. Just on that one. And then take a look. What else did I roll? Harley Davidson. Ooh, Harley Davidson. 22 contracts. Okay, I bought back the 23, 17 April. That was last week. I bought it back for 16 cents a share. And then I turned around and sold 22 contracts, Harley Davidson, 25 April. That's tomorrow. The 23 call option, see the exact same, 68 cents a share. I walked away with 52 cents. So just in case you don't do the numbers, let's figure that one out. Okay, let's take that and put that right there. Get rid of that. 22 contracts, Harley Davidson, 52 cents a share. 52 cents a share multiplied by how many shares? 22 contracts is 2,200 shares. So multiply it by 2,200 shares. $1,144 just for Harley Davidson. Okay, so it's $1,100 for Harley Davidson, $900 for Riley. That's not including U.S. Steel, Kohl's, Alcoa, Macy's, Riley. Oh, yep, Alcoa already did that one. So I'm terribly sorry, but you are wrong, buddy. I did not lose any money at all by rolling my Riley stock. I didn't lose any money by rolling my Harley Davidson stock. As a matter of fact, I've had Harley Davidson since last October. Every single week since last October. Hold on a second. Let's do this. Just for the fun of it, let's get out of here. Let's go there. Let's go there. Let's go here. Which one? Get out of that. Right there. This one right here. Okay, let's get rid of that. Let's go over to this. Let's go over to this. Let's go over to this. HOG, Harley Davidson. Woohoo! 17. Wow. Oh, wait. That's wrong. 2. Okay, let's go back to October. All right, there we go. No. All transaction. There it is right there. Okay. Okay, Big Dragon, you ready? I originally bought Harley Davidson, 10/21/24, a covered call, 2,000 shares, okay? 35 a call option, 35.79 and 35.79. I got $1.84 a share for the covered call. Oh, let's see how much that was. Clear that. Okay, 2,000 shares at 184. 184 multiplied by 2,000 shares, $3,600. So I bought Harley Davidson back in October. Okay, the very first week I had it, I made $3,600. Okay, the next week, 1 November, 40 cents a share. 8 November, 25 cents a share. 15 November, I rolled it for 50 cents a share. 15 November, another 130 per share. Another 15 to the 22nd, that's another week. I rolled it again, 42 cents a share. So, dude, I'm doing perfectly fine with my strategy. Simple, safe, predictable, consistent, and no way for me to lose because I refuse to lose any money at all. Now, I made a shitload of, this is just Harley Davidson. Let's get out of here. Okay? Now, if you want to count how many times I rolled forward or sold options against Harley Davidson, 36 times. 36 times I've created a cash flow from Harley Davidson. Okay, I have more money in my Harley Davidson returns than I paid for the stock in the first place. Okay, so please do me a favor. Anytime you want to insult someone, at least come with some facts, because what you said is wrong. When rolling an option, you lose money. Nope, I don't. Are you rolling so your shares aren't called away? William, absolutely. I roll them forward so my stocks aren't called away, number one, and for me to get more cash flow. My goal is simple. Consistency of cash flow. Preservation of my capital. I refuse to take a loss if I don't have to. Okay? So, that being said, we're past 11:30. My weekend starts today. I'm not here tomorrow night. I'm not here Saturday night, but I'm back here Sunday because we're trading on Monday. Okay? So, let's finish this up. Hi, your video streaming backwards. Oh, thank you, Zen. All right, so I have any more questions? False. Don't. Each your own, absolutely. Woodstock, okay, big drum. You're not telling the whole truth, and that's not right. Big Dragon, you want to come on? I'll be more than happy to show you exactly what I do. Peter, when you roll the following week, you lose the spread on your current trade. Nope, not at all. That's not rolling an option. Actually, it is rolling an option. You're buying back one week and you're selling another. Beware, this guy's teaching. He's not giving accurate data. Okay, thank you. Good luck, buddy. I've seen enough here. All righty. The premium changes as the price changes. Everyone who trades options via covered calls, see secure. Okay, gotta love it. Peter, in that example, you owned the 7,900 shares. Yeah, I'm aware of that. Do you own all the underlying shares for all the contracts you listed? Okay, hold on a second. Peter, okay, this is my trades last week in account number one. I have 7 accounts. I share 3 of them publicly. Okay, U.S. Steel, Riley, Harley Davidson, Alcoa, Macy's, and U.S. Steel. Okay, that's just account number one. Okay, I own all the shares on that one. Account number 2, Intel, Harley Davidson, Mara, Kohl's, Macy's. That's account number 2. Account number 3, just for last week, Advanced Auto Parts, Delta Airlines, Riot, Alcoa, Riley, Macy's, Halliburton, and we already did those. Okay? So, yeah, to answer your question, yeah. Lisa, do you hope you have a good weekend? Good. Big thank you. Much appreciated. You're welcome. Have you ever invested in crypto? No. I've looked into it. Now, don't get me wrong. I love the idea of cryptocurrency. However, with cryptocurrency at this moment in time, it's not safe. It's not secure. The only way I can make weekly cash flow on cryptocurrency is to sit in front of my computer. No, thank you. Sorry. Oh, what are contracts? Tasha. Do you prefer Pepsi or Coca-Cola? Austin, it's always going to depend on the numbers. Okay? Every week the numbers change. And every week, sometimes Coca-Cola is better than Pepsi. Sometimes Pepsi is better than Coca-Cola. Kevin, AGNC, before I go, would you prefer to... I suppose you can call me a scalper trader. I suppose you could say that. You really want me to take a look at AGNC before we're done? All right. Let's do AGNC real quick. Real quick. Let's go there. Let's get there. Let's go here. Let's go there. And let's go right here. AGNC. All right. High, low, was, is. No. Sorry. No. Now, it's got nothing to do with the chart. Okay, the chart looks okay. Okay, what I don't like Hold on, right here. Now, do you see these option premiums right here? Okay, right now it's at 878. The closest strike price is going to be the 9. The 9 is going for 1 penny. Yeah, no thank you. Okay, the 950, 1 penny. The 10, 0. Yeah, no thank you. The numbers are horrible. No thank you. Quick, simple, easy. No to AGNC. We're past 11:30. You guys have a great night. Uh-oh, I got to answer these questions over here on TikTok. Club Med Tom, good evening, good evening. Fitz Air, dude, you're just getting here? I'm just leaving. All right. Marvin Grant, good evening. Thank you very much. Wesley, thank you. Tyler Parkinson, what is your opinion on IQQQ? Okay, dude, I'm going to give you my honest opinion. Number one, find a financial website that you actually like and that you want to use. Look at the numbers for IQQQQ. What is the rate of return for the year? What is their consistency of profitability? How often do they increase their dividends? Check out that number and get back to me Sunday night. What's my schedule for streaming? Every night, Sunday, Monday, Tuesday, Wednesday, Thursday. Okay, I take 2 days off. Last year it was 365 days every single day last year. Awesome, thank you. All right, you guys over on Facebook, have a lovely day. Bye on Facebook. Woohoo! You guys here on, what channel is this? YouTube. I got 2 YouTube. Wait a minute, I got 3 YouTube channels. Holy shit. 3 YouTube channels. Okay, bye over here on YouTube. Have a nice night. Yep, and there. Okay, Instagram, you guys have a great night. Talk to you guys later. Out of here. Done and done. And TikTok, you guys have a great night. See you again. See some of you guys tomorrow at the morning trading group. Done. What's your name on YouTube? The 10-Minute Trader. Okay, bye you guys over here on this YouTube channel.